Welcome guys to another video. Today I will be talking about my theories for 25, how I'm designing my own strategy, my mental well-being, my mental sort of framework, and what decisions I'm making right now such that all the systems and decision making is in place for the latter half of the year and my emotions won't take over and necessarily ruin my trading profile. So as you know, I carry a cash Bitcoin stack or a spot Bitcoin stack. I have my MSTR position, which is about 40% of my MSTR position is in spot MicroStrategy shares. The rest has grown. That wasn't the initial allocation, but they've been in different options contracts, whether that be April 200s, March 200s. Those I bought back in the end of the summer. Those were fortunately a really good trade. And then I have a bunch of 380 calls expiring at the end of 25 and some 600 calls that will expire in September of 25. So what I'm going to go over is the framework I'm using to make my decisions, and then you can, if you're interested at all or following along, then this may be helpful. It may not be if you're a spot Bitcoin holder, but there won't be any real numbers. It's just sort of a framework. And I automated some options trading simulations using historical API data that I'd love to share with you as well. And I'll include that in a later video, so you can kind of figure out how maybe you would get some yield off the volatility. Let's go, and thanks for joining along. So firstly, calculated risks, life, MSTR, and options decisions. So obviously this has been a risky trade. I saw the opportunity. I wasn't going to start a tech company. This was the best way I thought I could kind of get escape velocity and amass a large amount of cash. So I took a big risk here. My call option was my education. I didn't hedge. I didn't really diversify. I concentrated into this MSTR trade. Obviously I had spot holdings, but I did go all in on the table here. Fortunately it has worked out. It may not. There could be a black swan event, but I'll be taking lots and lots of leverage off in the spring. Next, options decisions. Well, these long-dated options contracts that we've been trading with and using have been kind of a weird style of investing. I don't know. I haven't read any how-to books on how to hold long-dated call options, sell short-dated volatility against it, and how to make the proper decisions according to Bitcoin cycles. So, and not that the cycles will continue, but they're an important thing to keep in mind moving forward. I don't like pricing Bitcoin off the cycles. I hate it, quite frankly. But it's a necessary evil just because these cycles have been playing out. So corporate Bitcoin adoption and incentives, I think the real risk of not, in my mind, this was kind of a one-shot deal. Corporate Bitcoin adoption is the theme this sort of cycle and in 2025. And so it was really important for me to be exposed long to the upside with options to try to get as much profit out of the trade as possible. And the way I think about it is an expected value calculation. What's the chance you get this right? What's the chance MicroStrategy goes to a certain percentage? And what happens if you're wrong? And how much do you lose if you're wrong? And I found it to be a very asymmetric trade. I think that's that's a similarity between me and a lot of the other folks who have been in this trade. It seemed to have been a very asymmetric trade. And whether it plays out that way to the full extent, we'll never know. But next, I'm going to talk about greed. So greed, super important, because there's long-term incentive for corporations to adopt a Bitcoin treasury strategy for all the best reasons, to protect themselves against inflation and to obviously strengthen their balance sheet, right? But in the short term, I think a lot of these corporations will be looking for a quick buck. Investors will be really excited and euphoric about these small market cap companies adopting Bitcoin to their treasury asset. I think the degens will start coming in play. Degens, I guess I'm a degen, but more people will be investing in these Bitcoin treasury companies as they start coming online. The options markets, the volatility will be really attractive. So I really do think this is going to be a huge, huge thing this cycle, is this sort of greed. And obviously you want to be on the other side of greed. We can talk about that a little bit more. Charts hurt you in the short term. Looking at the chart won't make you a better, well, unless you're Josh Mandel. I think for me at least, looking at the chart is not beneficial. Recently I've been trying to step away from the charts for days at a time. That's the only way I'm able to make really good, prudent decisions. So now I'm going to talk about how I am thinking about the next year. So what are the risks? These are random scribbles on a whiteboard. Take that for granted. I have no clue what the Bitcoin price is going to do, but I'm going to talk through my own decision-making framework. And I think a large part of owning these options contracts, whether that be experiencing 70% drawdowns or whether that be during euphoric moments when they go up 50% in a day, you have to have strong conviction in your hold and in your strategy. And so whether or not this is helpful to you this may not be helpful to you in terms of numbers or your strategy, but for me at least, talking through the risks and benefits and really thinking through different scenarios that I see possible allow me, when I do go to make that decision in the spring, to live with it and not to mess it up. Because a lot of times if you go in and make a decision and then buy back in or do some sort of hasty decision, then you could get screwed. And so for me, I have a system where if I want to make a trade, I wait 3 days. So if I want to make a trade, whether that be exercise a contract or sell a call, I have to write down for 3 days in a row that I want to make that trade, and then I can execute on it. So for me, it's kind of a personal backstop so that greed and haste don't get the best of me. Now let's talk through these Bitcoin price paths. So a couple things to keep in mind. MicroStrategy will have a lot more Bitcoin at the end of 25 than they do now. Really important to remember. However, I think still the sort of fear, greed, market complex will be in full effect, and you don't want to get stuck holding the bag, especially with levered derivatives contracts. So that's why this first price path I bring up for you. So what is this first price path? This first price path is an early peak in 25, around the middle part of 25, even spring 25, and then a drop and then a steady progression upward. I would love to see this. I think it's quite possible, but this would be very, very difficult for most people, or for a lot of people who are expecting a cycle top around here, end of 26. If you get caught holding deep out of the money options contracts at the end of 25 and a price action like this happens, you might get destroyed. And now MicroStrategy may be significantly higher then than it was now, right, considering they have more Bitcoins. But do remember, there's going to be a lot of S&P 500 inclusion hype, which will probably drive up the price. And then you've got all sorts of different, FASB related and other corporate Bitcoin adoption things happening that I think we could see an early peak like this, and that would mean most likely you'd see sort of an MNAV expansion, whether that just be a little bit or a lot. But you do have to remember that during negative sentiments, that MNAV, that PDE ratio, whatever you want to call it, does contract. And so you don't want to risk holding those options contracts, because holding options contracts in a temporary bear market like this would be an absolute cataclysmic disaster. So this is something I'm very, very nervous about, and that's why I will be exercising the large majority of my options in the spring. Now, this is the second sort of price path I have here, which is a end of 25 peak. It's supposed to kind of be a 2017 cycle peak. Maybe this goes higher. Regardless, this, in my opinion, is also very difficult to time, right? If you're an options contract holder and you're trying to time the top and exercise options or sell options at the peak, you don't really have that much time. Who knows what this peak will be? Who knows how long we'll be above it? And it may come down as quick as it goes up. So that's something really important to think about. And one of the reasons why, again, this leads me to believe, or makes me really lean towards exercising early, because even if you miss this peak, right, you're still exercising during a time of strength, and there should be some nice implied vol spikes you can get in here, and some other potential MNAV expansion during sort of a FASB corporate Bitcoin adoption euphoric moment. And you really don't miss out on that much upside, considering how difficult it is to time the peak. Third scenario is this one, where Bitcoin goes up and to the right to 400, 500, 600K coin, and then chops. This is a scenario in which I think everyone would be happy. And so I think a lot of people would criticize my decision making regarding these sort of price paths here and say, no, Bitcoin's going higher for longer and you're going to get wrecked. So what I'm trying to make sure is that in these two scenarios, I don't get wrecked, right? That's why the early options exercising is something I'm considering, am pretty sure I'm going to do, and then also why I don't want to hold options later, right? So in these two scenarios, I'm trying not to get wrecked. In this scenario, obviously I'm a spot Bitcoin holder, I'm a spot MicroStrategy holder, and I will be an even more spot MicroStrategy holder after options expirations. So in this scenario, no, I'm not wrecked whatsoever. You'd only be wrecked in this scenario if you're holding a short position. Okay, so let's say you're holding short MicroStrategy position in the form of covered calls against 100% of your portfolio. Let's say you get up here and you sell a covered call and you miss all of this price appreciation. Now this would be quite upsetting for a MicroStrategy holder, right? If you are here, you see a peak, you exercise early, you sell calls, and you get your shares called away. In the case that Bitcoin continues, that's kind of a super cycle or just a steady up and to the right. I think that's also likely, and especially in this kind of scenario here, there's a real risk of selling calls early, getting called away on a peak, rebuying, and then crashing with your shares. So that's something I also am trying to consider and avoid. Now, what does this all mean? Pretty much means, for me, exercise early and then have a portion for volatility selling. So that's what I'm trying to do. I'll show you those algorithmic numbers, but my strategy as of now is early options exercising, beginning or middle of 25, then chunking off a portion for volatility selling that is not exposed directionally to MicroStrategy, because any sort of drawdown or peak could occur, and then leave the rest unhedged. I want to be unhedged and exposed for future price movements up. I do have price targets in which I would sell aggressive covered calls against, and anything above 300K Bitcoin, anything above 250 or 2,500 a share MicroStrategy, late kind of 25, I will turn on the juice and I will be aggressively selling covered calls. But barring those sort of price targets, I will be kind of operating using this framework. Thanks for watching. Hopefully this was helpful. I'll talk to you soon.